Good morning, everyone. I'm starting chapter 3 today. I will cover section 1 and 2. Okay? Right. So, I'm starting chapter 3. I will cover section 1 and 2. Section 3 we will do next week. So, this section is Introduction to Performance Management. So, how you evaluate people in companies. Okay, we are talking about financial and non-financial performance management techniques. Right. So, section 1, financial and non-financial performance measures. So, first one, this is important. They are saying if you want to have an effective performance management system, that is not only targets, the whole process from setting the targets, from evaluating, from the feedback, and from changing the KPIs accordingly. Likewise, when the environment changes, you have to change the targets also. Likewise, the whole process. For you to have an effective process, what are the things that should be there? First one, system architecture. That means all the elements of the system should be well designed, well organized, well planned. Likewise, the architecture has to be good. Like you have to have proper evaluation methods, then proper evaluation frequencies, then okay, likewise proper architecture. Next one, strategic alignment. Strategic alignment means when you are setting the KPIs that you are setting, the targets that you set should align with company strategies. So, some companies want to be market leaders. Some companies want to be cost leaders. Some companies want to build a strong brand. Likewise, different companies, some companies, if you are a vehicle manufacturing company, some brands, they want to say that they are the safest car. Some companies want to say they are the cheapest. Some want to say if you ride our car, the perception is different. If people see you driving our car, their perception of you will change. Let's say Lamborghini or someone, they don't strive for anything else. No? Okay, if it is Benz, they want to be like a safe car, a classic car. Likewise, so different strategies. So your KPIs, how you evaluate your people, should align with what your company is trying to achieve. Okay, that is called strategic alignment. Then measurement effectiveness. Some companies use only financials. Some companies use only non-financials. There has to be a balance. You should evaluate based on revenue growth, gross profit margins, likewise. Those are financials. That is okay. There has to be non-financials as well. Customer retention rates, churn rates, or else new product developments, number of new product developments, number of new ideas that you put forward, likewise. So those will be measurement effectiveness. So I have put here financial and non-financial, then lagging and leading. Lagging means most of the time, 90% of the time, lagging means financial. Financials, you put the financials after the things happen. So that is to confirm a certain circumstance. Okay. So let's say you have revenue growth. Okay. So revenue growth, let's say you are reporting revenue growth from Jan to March. Revenue growth, let's say 5%. You are publishing your statements, let's say in April. So they are giving you some information which is lagging, which is late. Lagging means late, no? Okay, so they will just confirm that there's revenue growth. Then you can't do anything about it. You can do something about it in the next quarter or something. Okay, those are not real-time information, those are historical information. Then you have leading information. Leading information most of the time will be non-financial. For example, real-time. So we lost this customer today. He told us he is not going to renew the contract. That is real time. So in future there is a drop in orders or drop in revenue, it will affect your profits or whatever. Okay, so that is real time information. So when you are doing your evaluations, you have to have both financials and real time operational indicators, or you call them non-financial. Okay. Next one, organizational coherence. That means unite different departments and functions around shared objectives. So most of the time this evaluation, although you do it, companies won't go forward because different departments compete with each other unnecessarily. They want to be the best, they don't cooperate with other departments. Likewise, there are certain individual agendas of department heads. So they try to go different ways. So if things like that happen in companies, these systems will fail. You can have the best system, but if the behavioral dysfunctions are there, you won't move forward. So you have to make sure your departments don't have unhealthy competition, that they work together. So for you to have a proper evaluation system, all these things need to be there. Okay, so keep those in mind even slightly, because when you get questions, you can write in these lines. Right? What are the lines? Your architecture has to be proper. Okay, everything should be well planned, well documented. All the committees in place, all the responsible people are appointed. Likewise, the architecture is proper. Next one, alignment. Then you give targets. The targets you give should match your company objectives. Okay. Right. Third one, measurement effectiveness. You have to balance between the non-financial and financial KPIs or targets. That is measurement effectiveness. Then organizational coherence. Everyone should work together towards a common goal. Otherwise, team effort. Yeah. Different departments can't unnecessarily compete with each other. So those are the features. So this is okay. No? Next one. Right. Smart features of objectives. So once you identify what you want to achieve, you give KPIs to people, key performance indicators. So when you give them, you will give them measurable KPIs. Otherwise, you can't achieve. If I tell people, okay, you have to make sure customers are satisfied. You can't measure that, no? Okay, you have to say during 1 month, customer complaints should be lesser than 10 in your branch. So that's a KPI. Okay, so that has to be specific, measurable, achievable, relevant and time bound. You call them SMART characteristics. Okay, specific means they have given you a certain example. Focus will be on reducing fabric wastage costs. You have to specifically tell them what we are going to achieve. Okay, so cannot be 2 or 3 things. It can't be wastage plus cost and customer satisfaction, not 2 or 3 things. Specifically one aspect. Okay, then measurable. So there has to be a certain number. Fabric wastage is 500,000. Goal is to reduce this by 10%. Measurable. Okay. Then achievable. Achievable means cannot be unrealistic. Okay, as I told you, can be challenging, but with the correct effort, with the correct infrastructure, it should be achievable. Okay, third feature. Next one, relevant. Reducing cost directly contributes to Blue Gem Textiles' overall profitability goal. That is, relevance means the target you are giving should match your strategies. Okay, your strategy cannot be to be the cost leader, and your targets cannot be to achieve something of high quality. It doesn't match. Okay, if you try to achieve quality, you can't be the cost leader, no? So likewise, whatever the targets you give should match the strategy. That is called the relevance. Then time bound. Time bound means they have to give a time from this period to this period. This should be the target. Okay, it can be monthly sales targets or annual customer retentions or quarterly revenue growth, likewise. Should be time bound. Okay, so those are the SMART features. Next one, distinguishing KPIs from standard matrix. Okay, so standard matrix is just a number, likewise, total number of deliveries made. That doesn't give you any information. You have delivered this many to this many customers. That's a simple thing. Okay, what you got to focus is the critical success factors, CSF. Just write down there, guys. I think I have just given CSF. It is called critical success factor. Let's take a school. If you are a school, what is the main critical success factor? School, government school, let's say, a normal school where children go. So in that, a government school, let's say, what is the, let's look at the country as a whole. Looking at our economy, looking at the type of schools we have, even in rural areas, what should be, let's take a school in a rural area, let's say, somewhere in a results. What should be a critical success factor? What are missing in our schools? You know, in very rural areas, teachers. Okay, so we don't get it since we are in Colombo, or the schools don't have teachers. Okay, people don't want to go there. No? They go there, they somehow go behind someone, get re-transferred to Colombo. So teachers don't stay because the facilities are not enough. So the critical success factor in a school is availability of teachers, for every subject. Okay, that is a CSF. First you establish that. There will be 5 or 6. This can be the main thing. So along this line, how do you design a KPI? So you give them something measurable. Let's say currently this school has 30% teachers on their subjects. Let's say you have, if the number of subjects are 100, 30% of it, for 30% of it you have teachers. So KPI should be at all times, it should be more than 40%. You can start with that, no? You can't go 100%, it's unrealistic, no? You can't go 80%, from 30% you can't go 80, no? Okay, from 30 you have to increase to 40. So it has to be 40 or more. That is called a KPI. That is how you do that. Okay, next one, the main thing, let's say scholarship. Okay, scholarship, if they don't have teachers to teach subjects from grade 6 onwards, you have to make sure students get through and they go to other schools, right? That's fine. Okay, so you have to make sure the scholarship results are okay. That is a critical success factor. Okay, so currently let's say rural areas, no, people don't have facilities. Let's say 20% of the people get through scholarship. Okay, so you say at least KPI will be should be maintained, no? Okay, KPI should be, you give a KPI. Your scholarship pass rate should be more than, let's say 35 or 40%. So that people at least can go to another school. Those who have the learning capacity can go to a school that has facilities. So this is for a school. No, I took a school because that's more understandable. So same way you do this to a company. Let's say Uber or some company. What is the critical success factor? Critical success factor, yeah, you have to, when I click my app, customer is the key, no? When I click the app, there has to be, I should get a vehicle. Okay, sometimes when you can't find a vehicle, it's really frustrating. You have to get a vehicle. Okay, that is number 1. Number 2, the timing should be accurate. It tells you, no, by this time you can reach your destination. I have to reach my destination. At that time, that timing has to be correct. Likewise, there are critical success factors. Then the drivers should be decent enough. Okay, a child should be able to use the vehicle likewise. Okay, so likewise those are the critical, should be safe, no? So those are the critical success factors. So along those lines you put the KPIs. Okay, the operations manager should be evaluated based on how fast people get a vehicle. Let's say your waiting time is 2 minutes. Under 2 minutes, a vehicle should be assigned. If it is like 3 minutes, he will be questioned. Okay, so that is the critical success factors and key performance indicators. Yeah, right.
Success factors වලින් result එක තමයි pass rates
වැඩි කරනවා. critical success factor එක කියලා කියන්නේ ඒ ආයතනයේට ඉන්ඩස්ට්‍රි එකේ රැඳී ඉන්න අවශ්‍ය කරන දේ. මොකද්ද තියෙන්න ඕනේ ගුණාංගය.
ඒ කියන්නේ minimum
survive වෙන්න තියෙන මේක. survive වෙන්න ඒකේ තියෙන එක හරියන්න ඕනේ දේවල් ටික. ඒ හරියන්න ඕනේ දේවල් ටිකට quantitative target එකක් දෙනවා. හරියන්න ඕනේ දේවල් ටික නිකන් කියන්න බෑනේ. pass rates වැඩි වෙන්න ඕනේ කියලා කියන්න පුළුවන්. ඒනට ඒක මනින්න ඕනේනේ. එතකොට මේ percentage එකක් මනින්න. එතකොට පහ වසරේ ටීචර්ස්ලා කොහොම හරි ඔය target එක ගහන්න ඕනේ.
එතකොට CSF එකක් කරන්නේ අර මේ කියන්නේ ඒ survive වෙන්න මේ chance එක නැති වෙනවා.
CSF කියලා කියන්නේ ඔය CSF තියෙන්න පුළුවන් BMW එකට. BMW එකට ඒගොල්ලන්ගේ මේක පවත්වාගෙන යන්න ඒගොල්ලෝ මොන දේවල්ද හරියට මිනිස්සු ඒගොල්ලන්ගේ බලාපොරොත්තු වෙන්නේ. මේ ටික තියෙන්න ඕනේ. මේ ටික එකක් නැති වුණොත් එහෙම BMW එකක් මග නැවතිලා තියෙනවා දැක්කොත් ඉවරයි. කියන්නකො ඩබල් ලයිසන්ස් එකම දාලා ඉන්න පාරේ BMW එකක් තියෙනවා කියලා. දැකලා නැහනේ. ඒක තමයි critical success. ඒක කොහොම හරි ඒක වෙන්නේ නැති වෙන්න ඕනේ. මරු ටිකක් තිබ්බට කමක් නැහැ. ඒක කවුලක් නැහැ. තේරුණා නේද? බෙන්ස් එක මිනිස්සෙක් මැරුණා ඇක්සිඩන්ට් එක. ඒක ඒගොල්ලෝ කියන්නේ එහෙම වෙන්නේ නැහැ කියලානේ. මේකේ හැපුණාට මිනිහෙක් මැරෙන්නේ නැහැ. හැබැයි මිනිස්සෙක් මැරුණා නේද කවුදර මේ බෙන්ස් එකක්ද කොහෙද තමයි පැද්දේ මේ විනින් මැනික්ගේද කොහෙද පුතා මම හිතන්නේ බෙන්ස් එක තමයි නැති උනේ. ඒගොල්ලෝ කාර් එකක් දුන්නා ඒකට. They say it won't happen but it happened. ඉතින් මේ මොන හයියෙන් ගිහිල්ලා ගහක වද්දගත්තොත් පොඩි ළමෙක් නේ. ඉතින් අර එහෙම අවුරුදු 19ක්ද කොහෙද? එතකොට එහෙම කන්ද යන්නේ එනට එහෙම වෙන්න බෑ. එහෙම වුණොත් ඒ mortality rate එක 0 කියලා තමයි කියන්නේ. ඒක කැඩෙන්න බෑ බෙන්සල. බෙන්සල එහෙම මග හිටින්න බෑ. ඊට පස්සේ මොකද්ද මේක එහෙම කියනවා මම දන්නේ නැහැ ඒක ඇත්තක්ද කියලා මේ රෝල්ස් රොයිස් එකේ මම දන්නේ නැහැ ඒක ඇත්තක්ද කියලා මම අහලා තියෙනවා ඉන්ටර්විව් කරලා තමයි කායක දෙන්නේ කියලා. ඇත්තද නැත්තද මම දන්නේ. ඒක සෙකන්ඩ් හෑන්ඩ් මාකට් එකක් නැහැ කියලා කියනවා. රෝල්ස් රොයිස්. ඒක ප්‍රෙස්ටිජ් එක. කවුරු හරි කිසියම් ගෑනු කෙනෙක් ඒකට ඉන්ටර්විව් එකකට ගිහිල්ලා තියෙනවා. එයාට ඒක දීලා නැහැ. එයාගේ ප්‍රොෆෙෂන් එක. සල්ලි තිබ්බට. එතකොට ඒ වගේ එහෙම ඉන්ටර්විව් කරලා තමයි දෙන්නේ. එහෙම එක එක අයට critical success factors තියෙනවා. එහෙම අනවශ්‍ය කෙනෙක් ඒ කායක පදිනවා දකින්න බෑ. ඒව තමයි ඒ කියන්නේ මේ ඒ කම්පැනි එකේ ඉමේජ් එකෙන් බලාපොරොත්තු වෙන දේවල් කම්පැනි එක එතන තියෙන්න සපුරාලන්න ඕනේ අවශ්‍යතා. ඒව හරිම ක්‍රිටිකල්. වැදගත් නිර්ණායක. ඒ නිර්ණායක දෙනවා මේකක් හැටියට. මේ නම්බර් එකක් හැටියට. ඕකේ හොස්පිටල් එකට mortality rates කියන එක හරි වැදගත් නේ. හොස්පිටල් එකක mortality rates තමයි වැදගත්ම. සර්ජරි එකක් කරොත් මැරෙන්න බෑ. ඇතුළට ගියොත් මිනිස්සෙක් මැරෙනවා නම් ඒක ප්‍රශ්නයක්. ඔය වගේ තියෙන එක කම්පනීස් වල හොටෙල් එකක ෆුඩ් තමයි ඉම්පෝටන්ට්. චෙෆ්ට තමයි වැඩියෙන්ම ගෙවන්නේ. මොකද මිනිස්සෙක්ට ඒක හරි ගියේ නැත්නම් ෆුඩ් පොයිසනින් වගේ වුණොත් ඒක. ඉවරයිනේ. සුද්දෙකුට වුණොත් එහෙම නඩු දානවා.
If it is a school, critical success factor is students.
No.
Students result.
More than that, the availability of teachers. Because I remember specifically when I went to school, I wanted to do statistics for A levels. I did commerce, no. I wanted to do statistics. My school didn't have teachers. None of the schools had teachers. If you wanted to do it at my time, at that time, if you wanted to do statistics, you had to go to private classes. School did not have a teacher. Imagine in Colombo, in a මොකද ජාතික පාසල් කියලා කියන්නේ එහෙම ස්කෝල් එක. ටීචර් කෙනෙක් නැහැ කිව්වහම සබ්ජෙක්ට් එක. So that's you don't have the CSF in that school. It's a failure of the government. It's a national school, no? So it's a failure of the government. So because it has a higher Z score. I wanted to do that. I didn't want to take that risk without no teachers, without proper classes. When I was schooling, tuition classes were not that developed. We couldn't take that risk. So I had to do business studies or something, very low Z score subject. So that's the CSF. Your whole this thing, no, the whole life, you know. Are you clear on that? That is the difference between critical success factor. Critical success factor is broad. KPI gives the measurement of it. Target, a measurement, a measurable thing. That has to have that smart qualities. Okay, clear, no? Right. Here, CSF should align with the strategy. There has to be a KPI attached to the CSF. Now, for example, cost leadership for a budget airline. Budget airlines like Fritz Airlines, so they don't go for quality, no. That is the cost effectiveness. That has to be their main strategy. So along that line, asset utilization is very important, critical success factor. Because they try to they don't have much assets. Those are budget airlines, no? So they have to get the maximum from the assets. That is the critical success factor. So aircraft turnaround time, target 25 minutes, lesser than 25 minutes. Okay, within 25 minutes, the aircraft should be ready for its other trip, turnaround trip. You don't have the luxury of, you know, parking the airline for a longer period of time, because those are budget airlines.
They will give a use in their within the country transportation.
මේක යනවා එළියටත් යනවා ෆ්‍රිට්ස් එයාලයින්ස් නම් යනවා. මේ එළියට යනවා. වෙන රටවල් වලට යනවා. එයාලයින්ස් මේ ඒවා යනවා. එච්චර ගොඩක් මේගොල්ලෝ ගෙනියන්නේ නැහැ. මේ කෑම දෙන්නේ නැහැ. ලගේජ් එක අඩුයි ගෙනියන්න පුළුවන්. ඔන්න ඔහම මේ weight එක අඩුයි. ඔව් ඉතින් ජීවිත අවදානමක් අරගෙන යන්න. In US and all, I think it's within the country because of the distance. In our country, you can go to another country, no? Like let's say we go to India, that distance for US is within the country. So they want a person who travels in a budget airline won't use an airline facility to travel within the country in Sri Lanka. That is also there, no? From Katunayaka to another airport in Sri Lanka, he won't go in a plane if you are using a person using budget airlines. They will go to another country in a budget airline. Okay? You go to Malaysia and all in Fritz, I think. Then customer intimacy, that means their loyalty to a hotel, to a luxury hotel. Personalized guest experience, repeated guests, okay, has to be at least 60%. Out of the guests who have visited the hotel in 1 month, let's say total guests are 100, at least 60 should be repeated customers.
They should be satisfied, no? Customers should be satisfied.
Because it's very important that you have repeated customers. That means previous visit has been a success. Yeah, right. Then product innovation for a tech company, speed to market. Tech companies are very fast moving companies, no? Like 1 day difference, you lose the market. You should be the first to get into a certain product. So how you speed to market is that whatever you have been researching on, how fast you can make it feasible and sell it in the market. So that you can, this thing, average time from concept to launch lesser than 9 months. You think of something today, within 9 months it should be in the market. Yeah, so likewise. Okay, so let's do questions from these. As a management accountant at Mango Holdings, you are tasked with addressing critical challenge following the group's recent ERP implementation. So they have introduced an ERP system in the company. Conglomerate operates 5 distinct divisions: agriculture, textile, renewable energy, seafood and logistics, completely different sectors. Okay. Each historically using its own performance matrix. They have company specific matrix. Okay. Agriculture division tracks crop yields and auction prices, while renewable energy focuses on the levelized cost of energy. Okay. This fragmented approach prevents effective group level assessment and strategic coordination. They don't go by the same, so you cannot compare between the companies, because how do you, let's say, yeah, different, no, let's say crop yield in agriculture company with, do they have hotels? Seafood is there, no, logistics. Okay, let's say crop yields in agriculture company and on time deliveries in logistics. How do you compare between the two? There are no common ground. Okay, you don't know which company is doing better.
Objectives are different.
Yeah. So if when your measurement units are different, you can't compare between the two. So that is the issue. CFO has recognized this limitation and poses a fundamental question. How should a diversified group design a performance management system that balances divisional autonomy with group level strategic control? Your challenge is to design a unified performance management system that provides comprehensive oversight while respecting divisional expertise. Okay. So how do you design a performance management system? Okay, I put the answers here, otherwise you can't read my handwriting. Okay, you should have anyway group level performance indicators. What are group level performance indicators? There are common financial metrics like return on investment, return on capital employed, payback period for big projects, employee retention ratios. Those are not financial ones. So higher level ones. So return on capital employed can be applied to all these companies. No? Payback period can be applied to all these companies. Okay, revenue growth can be applied. Margins can be applied. Likewise. Return on equity is a common thing. Let's say debt coverage ratio, but debt coverage ratio, some companies, sectors have more debt, some companies have less debt. Likewise, you can't use that. However, there are some common metrics. Those metrics should be applied to company valuations. It can be applied to renewable energy, it can be applied to logistics. Yeah, that is what this says. And company specific performance indicators. There are company specific performance indicators as well. You cannot live without company specific performance. If you are a hotel, occupancy ratio will be a company specific this thing. If you are a supermarket, profit per square meter will be a company specific this thing, because in supermarkets the highest limitation is what? Space. So you have to measure the square feet profit. If a certain product is not giving the proper square feet profit, you take it off. Likewise. Okay, so there can be company specific ones also. Connect organizational performance indicators to group strategic objectives. You cannot have cost leadership as a company objective. Company means these 5 companies. Huh? You have Mango Holdings. No? So this has 5 companies. Agriculture, textile, renewable energy, seafood and logistics. Right? So the issue here is these companies use different company specific metrics. So the people here, the board here can't decide which company is doing better. So what I am saying is you can introduce, you can use ROCE, return on capital employed, for all these companies.
Common reason.
Common factor, no? Then you can use return on equity on all this. You can use payback on all this. Or revenue growth. Likewise, there are certain matrix you can use on each and every company. That's what I am saying. Then in addition to that, there can be company specific matrix also. What are the company specific matrix for agriculture? Like they said, crop yield. Per acre, how much yield from each crop? How many kilos or whatever. So that you can use it, you can compare that with the other companies in the same industry. Okay, that is agriculture. Renewable energy, they are using something called the cost per kilowatt hour or something. You can use this. You can compare this with other renewable energy companies. Okay. If it is seafood, yield per, let's say whatever, let's say it's prawns or something. In the last quarter, the yield per one, per 1 pond. Likewise, different companies can have different matrix, but there has to be common matrix as well. Okay. The next thing that I am saying is connect organizational performance indicators to group strategic objectives. So these should have something to do with corporate strategy. Okay, let's say corporate strategy is to increase brand image. Okay, if it is to increase brand image, then in addition to crop yield, you have to have a certain matrix here that will improve the brand image. Let's say you are going into healthy food or something. So you call it organic food. So you move into organic food. So you can say how much the organic food production out of the total crops. You can't make everything organic, no? For you to make it organic, it's very difficult, because for you to get that certificate, the people who are around you shouldn't use chemicals. Because if they use chemicals, that gets added to water streams and you get chemicals in your crops. So it's very hard to get the organic certificate. So you can't do organic food like that. If at all, you have to buy everyone else, buy off, so that there's no chemical usage within that radius. So you will have to assign a plot of land for organic just to build brand image. Got it? Then whatever the seafood or whatever, if it is seafood, if you want to build brand image, what can you do? For seafood, you get an international food certification. Quality certification, like for seafood. We comply with international food quality certification likewise. So whatever the company matrix that you have should align with corporate strategies. You don't have to go into that detail in your answer, but I just explained. Got it? Yeah? Right. Next one, balanced performance indicators. There has to be proper financial indicators and non-financial indicators as well. Okay, everything cannot come from income statements and balance sheets. That will be financial indicators, no? There has to be some operational indicators also. Okay, next one, show real-time performance indicators through ERP system for both group level and individual companies. Okay, that will be very important. Now they have an ERP system, no? They might have spent a lot. So you have to make something out of it now. So you make some changes to the ERP system. You tell those people, look, in my ERP system I need to see these things real time. Okay, right. Assess the performance at the group level frequently and recommend action. You can do all that, but if there is no governance, it doesn't make any sense. There has to be a committee which needs to convene at a certain frequency. At that meeting, you have to discuss this. Our crops yields have failed this much. We are going to go for organic food, so we have to buy these plots of lands. Likewise. Got it? Take this down. You can put others also, okay? Dividend yield will be an important matrix here. How do you calculate dividend yield?
Tax profit.
No. Dividend yield? Dividend per share divided by market price per share. Whenever you say yield, that has to do with market price. Huh? So what are they asking? Your task is to develop concrete performance management framework that aligns the diverse teams towards a single corporate vision. Right, so let's go through the question. As the strategic planner at Citrus Advertising, you face critical challenge in operationalizing the CEO's newly announced strategic objective for the coming year. What is his strategic objective? To become the undisputed leader in client value creation. Okay. So this ambitious vision presents significant implementation challenges given the diverse nature of your divisions. So this does not have different companies. This has different departments. One company, different departments. Okay. Creative team traditionally focuses on winning industry awards for artistic excellence, while media buying team prioritizes cost efficiency and budget optimization. Digital division emphasizes innovation and emerging platforms, whereas account management concentrates on relationship building. Likewise, different departments have different agendas, different values. Central question you must address is, how can a professional service firm translate high-level strategic goals like enhancing client value into meaningful performance targets for departments with fundamentally different functions and success metrics? Some are fundamentally different, no? Marketing department and accounts department are fundamentally different. Marketing guys will be creative. Accounts guys cannot be creative, no? They have to follow certain regulations. So they are, by blood, they are not creative. Okay, so likewise. So what to do? How to develop a performance management framework that aligns these diverse teams towards a single corporate vision. Okay, see whether you understand these points. Decomposing the vision. So when you, that phrase decomposing the vision means you have the main vision, value creation, you filter it down to other divisions, to the lowest level possible. Okay, only the CEO cannot have that value creation mindset. The people at lower level also should have that value creation. Okay, CEO can't run the operations, no? Got it. So you drill down your strategies to lower levels. Okay, identify value points in each individual departments. Client value creation. So there are contact points at different in different departments with the clients. Sometimes clients can contact accounts divisions also. So if they don't speak to the client properly, that value creation will not be there. You get my point? So likewise, at each division there are value creation points. What can we offer that our competitors don't offer? Okay, let's say I'm just saying, let's say a customer talks to you, you are in the accounts department. He wants to see whether he has paid the last month bill. I'm just saying last month bill. So if you tell him this thing, if you go an additional step ahead, it doesn't cost you anything. If you go an additional step ahead and say, so you give us your email address, for the last 12 months, I'll give you the payment date with the amount. Maybe he doesn't want it, but that effort will have an impact on the customer. So that is how you grasp a customer. You got it? It doesn't need to have any investment. It's the mindset of people. Yeah. Likewise, so identify value points in each individual departments, because those are the critical points. Yeah. Decide which of the current performance measures of each individual department should be retained or discontinued. Now you have some KPIs, no? Different people have different KPIs. Now your main strategy is what? Value creation. No? So some of the current KPIs will not be valid anymore. So you will have to discontinue. If you go along that, you are contradicting yourself with the main strategy. So if there are current KPIs that don't match with your strategy, you ditch them, discontinue. Okay, those who support the strategy, you will take forward. Right. Add individual department objective to ones obtained from step 1. You have the decomposing division. They have drilled down to individual departments. Then there are individual department strategies also. Account division should have some strategies, right? So those strategies you align with this strategy, with the main strategy. Now for example, every third day of the next month, you send a statement to your customers. That is the accounts division strategy. That doesn't happen in marketing division, no, that happens in accounts division. So every third of the next month, you send them their statement. Okay. Now what you do is, in addition to what you send, you will send them some more information. You can contact them and ask, what we send you, is it enough? Anything else you want to add in your statement? You add it and you send. Got it? Then that will add to your KPI. Whether you have called, whether you have contacted all the customers, are you complying with their requirements now? How soon you can comply? In another 2 months or in another 3 months? You might not be able to do it immediately. You will tell them, give us the next month, till next month we will incorporate your requirements in your monthly statement. Got it? Something like that. So you add departmental objectives to the objectives you have already identified under the first step. Okay, right. Establish links between different departments. That means there will be coexistence. No? Without someone doing this, the other department can't do something. Okay, now for example, let's say you have a stores department. In your stores, without them entering their GRNs, accounts cannot balance the inventory. Is this correct? Likewise, without one division doing their job properly, the other division can't complete their job. So there are interdependencies. So it's very important that you identify them. You can't just do KPIs and just leave. For them to achieve their KPIs, there are certain procedures the other department has to do. Otherwise, you can't even calculate the KPIs. There will be some data entering, there will be some, record freezing and all. Without that, the other department cannot calculate. So you have to identify those. And you have to properly organize the process accordingly. Clear? That is what I meant by establish link between different departments. Next one, report performance frequently. That is straightforward. No? The KPI performance you report. Establish culture of coexistence between departments. There are some companies that I have seen, if two departments talk to each other in a friendly way, the directors take it the other way around. Now for example, let's say you have an investment department, then you have a risk department. Investment department invests their additional funds. Okay. Risk department, what do? They show the risk in those investments. Okay, you can put it in this company, but there's a small risk. Okay, but there's a small risk. Likewise, you show the risk. No? Now, if the directors see the head of investments talking very friendly with the head of risk, they get a strange idea. They say, okay, now the risk is not shown properly because these two people are very friendly. They don't go against each other. That type of culture, that's a sick culture. That kind of culture you can't have in a company. There has to be coexistence. No, we can fight, but it's not our company. No, you put the report. That's it. Okay, right. So report establish culture of coexistence. So that kind of things cannot happen. Okay, you have to make sure people go along. Otherwise, companies can't run. තරහ වෙලා companies දුවන්න බෑනේ නේ. Okay, right. Get customer feedback at different points on different interactions of each department. If the record shows that customer has contacted the accounts department, you have to make sure to get a feedback from the customer. After each and every call, let's say send him a text message. How was your experience? That happens, no? Rate from 1 to 5. Because value addition is your strategy, no? He calls the procurement department. He gets a text. He calls some other, I don't know, some different departments. You get a text message. Technical divisions. You get a text message. Because you have to make sure the customer is satisfied. No, that is your strategy. Not only marketing, other departments are also responsible. Okay, take this down. You are clear on how to answer, no? In essence, guys, Write something. That's it. Write something, you get marks. ඒ ඉන්වෙස්ට්මන්ට් ඩිවිෂන් එකයි රිස්ක් ඩිවිෂන් එකයි කතා කරනකොට හිතන්නේ කමිෂන් බෙදා ගන්නවත් දන්නේ නැහැ. Seriously, that's how they think. That can happen, no? Let's say I put my money into an investment. I get a commission, investment department. එතකොට රිස්ක් එකට කියනවා මේ ටික පෙන්වන්න එපා. හොඳ report එකක් දෙන්න. ඔයාලට මෙච්චර that can happen, but that doesn't mean that you can't speak to each other. No?